Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell. It is 6:20 on Friday, May 6th, as I'm starting the video. And please remember to run your player at 1.5x. Quick look at futures. Oil is tagging $111 a barrel. I think that's up about $2 a barrel. Stocks, all things considered, are mostly unchanged, down about 0.5%. Gold is up about 0.3%. On the macro front today, we've got the big April jobs report that comes out at 8:30. I'm going to leave it up to you to go through the earnings calendar. You can find that on the website. I want to devote extra time this morning on the charts, and I'm going to go through and we'll discuss what happened yesterday as we move along. I want to start out with this LQD investment grade bond ETF. You'll remember that during COVID we had this big plunge, and this is where the Fed stepped in and started buying everything under the sun for the big save. I mean, you'll recall buying, Apple corporate bonds and, all big company investment grade AAA bonds to save it. Well, look where we're at now. We're on our way to getting back down into these mission critical levels. And I just point that out because if you go across the bond complex, and I feel bad about not devoting enough time to it, but you'll find that TLT, i.e., all the different series ETFs are all coming in on weekly support. And maybe I'll do a dedicated video over the weekend to discuss that. But remember, bonds are a quality, risk-free asset. And if the stock market lets go with bonds all sitting on long-time key support, you may see a rush into bonds as a safe haven and get a sizable bounce if the equity market cascades. Now, talking about cascades, we had Bitcoin yesterday. We talked about this line of support coming up off. What is going on here? Oh, I see. It's already registering trades today since it's 24 hours. But you can see yesterday we were off about 8, 9, even 10% at one point at this 36,000 level. So the door is now open for, at minimum, a tag down here at around 33,000. I think when you look at this whole structure as a bear flag, B, C move, I think it projects down to the 28,000 level. And as we've been discussing, just like a shark, when it stops swimming, dies. When liquidity gets drawn out of the system and Bitcoin loses momentum, it dies. And I just see this thing going lower. You trade it as you will. I haven't done a lot of trading in Bitcoin, so I'm stepping a little outside of my comfort zone. But I know charts, and this says it's going lower. Yesterday, as you'd expect, some more extreme put buying, but not crazy. Just down here at this 0.87 level, we've gone much, much lower in the past. So I don't see a whole ton of fear in the market at this moment. NASDAQ oscillator pulled back from 15 down to minus 16. So right in the middle of the range. And that, I mean, think about it. 5% rug pull yesterday. And all it did was go from 15 to minus 15. That's nothing. And if you want to explore more on how that calculation, like if you can't get your head around how that could be possible with one of the biggest down days we've seen in a long, long time, go to Investopedia.com or just Google NAMO or NIMO. You'll get a definition and the calculation for that online, and you can, with some examples and explanation, they'll do a much better job than I can on figuring that out. But the point of this is, even when we go to NIMO at minus 22, the rubber band is not stretched. The rubber band is not stretched at all to the downside, and so plenty of room for more selling. VIX was real interesting yesterday. Gapped up off of the open and went straight on up. I think today this 33 is going to be an important level. You can see that we got up into the 37s just the other day. This was the prior sequence. This was Fed day. And then this was the day after Fed day. So getting a lot of movement on the VIX. And, when we go to the term structure, we had bounced out on this intermediate term up here, obviously heading back down, and the ultra short term volatility term is still down here in the extreme fear range. So on SPY, we were down 3.5% after just having had a 3% move on the back of the Fed. I think it dawned on people that, whether 75 bips is off the table or not, we are truly entering into a rate hiking cycle, and that's a headwind for stocks. I mean, we've been saying it for a while. I was disappointed and shocked at the Fed statement. If they're really trying to tackle inflation, that was a strange way to talk about what their policy shift is going to be. But that's all conversation. We got to go by the charts. And I mean, this has been, do not feel bad if you have experienced some tough trading, mental anguish, P&L turbulence. This is not easy. I mean, when you go, when you're going plus or minus 3, 4, 5% on a daily basis, that is a tough environment. And it's all about time frame. If you're camped out bearish out in July, that's a little different than, shorter term active trading. So you can reduce your position size, and I mean, just think about it in a normal bull market. You might have 1% day might be a big day, and you don't have that big P&L swing, but in a bear market with volatility jacked, you can cut that position size down by a third or a half, and you can make plenty of money if you're on the right side of the trade. If you're on the wrong side of the trade, then you'll lose less. But my point is, if you've got a wildly swinging P&L, it's going to weigh on your emotional stability, especially if you're a guy that looks at the P&L every 9 seconds. throughout the day, and it ticks up and you sweat, and it ticks down and you're elated. That's a hard way to go through a trading day. So find that center of gravity for yourself where you're at ease with the volatility. And if you need to, hide the P&L. Put a piece of masking tape over it. Go into your platform and figure out how to block it from being visualized. Because if you have the right position size and you're trading off of levels, then the money is what it is. You don't have to know about it every 5 seconds. But if you're looking at yourself and saying, okay, I am short below 415 on SPY, and as long as price is below 415, I don't need to worry about covering or how much money it is or anything like that. I'm going level to level with a position size that I'm familiar with, or not familiar with, a position size that I am comfortable with. And then that's the key, and that'll bring a lot of composure to your mental stability, and also give you a lot more fortitude in trading the levels and executing around those levels. So don't feel bad if the last few days have been tough. I mean, it's been tough on everybody. It's been tough on me. I was all set up bearish, and then Powell did his thing, needed to cover everything and try to get long and capture some of it. And then, were they going to follow through yesterday because of all the bullish divergences and all that stuff? And then they reversed it. So, come on, that's a rough couple of days of trying to get positioned. But let's look at it here. Let's look at the levels. SPY. 415 is your pivot point. That lines up with these March lows. And then the level below that you got to watch is 410. We had a touch of that yesterday. We had a low touch of 409.44. Probably a momentum overshoot. But this is Friday, right? Think to yourself, after what's happened yesterday, what amount of market participants are going to say, yeah, let's get long into the weekend? That sounds like a great idea, right? You may see more selling today than you did yesterday. Because if people are liquidating, and that's what yesterday was, that was a liquidation day. It doesn't matter if it's Apple, it doesn't matter if it's Amazon, it doesn't matter if it's Google or anything. Microsoft, Facebook. There are some big money sellers out there yesterday. And whether it's 60-40 portfolios, or pension funds, or big hedge funds that the tripwires got hit on their volatility regimes or redemptions or whatever caused it. When those guys hit the sell button, it's right across the board. They're not saying, oh, well, this is a good stock and that's a bad stock and look at the valuations and all that kind of stuff. It's sell everything. And what happens is that it's in proportion to what you have. So if you are loaded to the gills with the FATMAAN names, a tech-heavy fund, you're going to be loaded with Apple. You're going to be loaded with all the big 7 names that we track. And then if you decide to hit the sell button, those big money names those marquee names become a source of funds. Selling out your ARK is nothing. You just can't generate the money. So you gotta sell down your Apples and your Microsofts and your Amazons and all that kind of stuff to generate the money you need to get down to the level that your rules or whatever say you need to get down to. So what I'm fearful of today is that yesterday's move may propagate another move, maybe fueled by retail, because I'm sure I didn't watch any of the news last night, but I'm sure a lot of that hit national news kind of things. And in this day and age of people looking on their phone every 5 minutes to know how their IRA is doing, right? They may be calling logging in today and going to cash. And that reminds me, remember what we talked about, the 20-month EMA on QQQ closing below? If you took that as a cue, you're way money ahead, because now we're a lot lower than where we were just a week ago when we flagged that for IRA type money. Here we are in SPY 60 minute. Yesterday we talked about this level being really important here. 429, reject, gap down. Oh, Chris, there's no way I could have got that. That's true. But we also said this level here at 423, if you lost it from above, as in any setup, it's a sell. So you had a sell at 423. You had a sell signal at 420, 419, and then you lost 415. So that's all active trader stuff. And just remember, talking generically, gap ups are favored to keep going higher. Gap downs are favored to continue going in the direction of the gap. So when you have a gap down, you got to be thinking downside and looking for those levels to confirm the move. And in this case, it was 423. So I would be really keying off of this 415 today and 410. If 410 breaks, that opens up a doorway to retest these lows back here at 405. If the bulls step in and break it above 415, you could get a rally up to this downtrend line at 420, which will be an important spot on the chart. QQQ, devastating emotional candle for the bulls. Here, they thought they had it. The big, whatever percent rally coming out of the Fed, and then the bears just slammed them yesterday. 5%, I can't remember a 5% down day on the Qs. So here, we broke decisively below this prior support area from 322 to 317.5. The level that needs to be in your crosshairs today is 317.35. If bulls can break it above that and then clear 322, we said that the other day coming out of the Fed, the bulls need to break above 322 and hold it. Well, they didn't. The first move out of the Fed was fake. They got slammed yesterday with mega cap tech selling off across the board. So on the low side, you've got 310. On the high side, you've got 317.35. And if there's some kind of a flush move today, if everybody heads for the exits before the weekend, you got to bring this gap into your field of view where we could make a move down to 298 to fill that gap this afternoon. Not a prediction, but my job's to show you the levels on the chart that are going to be important. And you break the prior low, right? You break a prior low, should bring in more sellers. Maybe we come down here to 305, top of the gap, get a little bounce, and then they slam it into the close. We'll have to wait and see. But like I said, you break the prior low, you'd have to be a bold son of a gun to step in on a Friday afternoon, wanting to get long, because then what happens Monday, right? We're in that cycle of bad Thursday. Who wants to get long on a Friday and then follow up selling after the weekend and then turn around Tuesday? So we've talked about that cycle before. So we got to keep that in the realm of possibility. Here we are. We had that double touch of 310. I think that's an important level. There still is bullish divergence, but as we've seen, they couldn't get the follow through. And here again, we had this level here at 330, rejected, gap down, broke back below 322.5, right through the support zone, which now becomes resistance, back down below this 317.35. I think that's an important level to watch. So here on IWM, we had the bear trap that turned into a bull trap, which turned into a break below support, which now at the close of the week, closing the week below 187.50, keeps the door open for that measured $20 measured move down on IWM here. Notice these levels are not coincidence. This was a high. This was a high. We talked about that 194. What we talked about even more was this 191.5, which was resistance, resistance, support, support. And we said if it broke 191.50, you want to be short. And that's exactly what happened. And the gap went down right to that level. Whether you got it or not, only you know whether you were focused in on it or whatever. If you had the composure to get it, if you trusted it, never looked back. So now today, I think anything below this 187.50 that ties into the daily chart, I think you can stay short below that. And if we were to break 183 today and carve out new ground to the low side, I think that opens the door to more selling. Moving on to Facebook, 60-minute chart, gap down. We had these levels for you on the downside, and now we've settled into this area where you can see there's been a lot of support here around 208. You've got a large volume over price bar here, so I think you can use that as your pivot point today, with another support level coming in at around 203.50, 204. You've got the ledge here. I think what you may want to do is not really mess around with it up here. Set yourself an alarm at 203 or 202.50, and that will give you ample opportunity to get short for a run down to the top of the gap. And if all the stars align, get yourself a gap fill all the way down to 175 with this entry. Another approach might be, I'm not going to mess around with any of this. I'm just going to alarm the gap. And then if I get a gap entry, then I'll get short. Wanted to show you the daily chart. Rejected at this level. We had the double bottom marked in with a hypothetical target. It never triggered. And so now, at least short term, that setup has been foiled by the bears. I think at this juncture, it's really important to note on a lot of these charts, you've got to recognize that you could have a bullish set of circumstances on a 60-minute chart, but within the whole scope of the, all the price action going out to the weekly, you can tell Facebook is broken, right? When you look at this chart, all your RSI on a weekly basis has been in the bearish regime for the better part of 6 months. Momentum is totally cratered. You do have a double bottom here on the weekly chart, so that's your fail-safe line. You break 185, then it's going lower, and you can see we're already below the pre-COVID high. And that reminds me, I think that's going to be a real important level on a lot of these charts, round trips back to the pre-COVID high, if not lower. Apple 60-minute chart. We talked about these levels very distinctly yesterday. We talked about this prior high. We talked about if price got below 163.5 to be short. Got a fast move down here. Can't remember the last time Apple was down 5.5%. That is a source of funds trade. That is a liquidation trade. Sell what you have, not what you want to. Indiscriminate selling. So today, we've got this 156.5. You break below that, that's going to open up this prior low at 153.5 and potentially lower. Let's look at the daily chart. We're at that critical level that we talked about. Right here at the triple intersection of an uptrend line, the 200 EMA, and lateral support at 157.50. The 200 comes in at 158. We're currently below that. We're at 156.77. So big picture, kind of like the Tesla trade that we talked about the other day, you can use that 200 EMA as your go, no-go line. And remember that in a lot of algos and institutional money, slipping below the 200 EMA is a red flag in a lot of programs. They just won't do it. What I mean is it's okay, now we have to sell because we lost the 200 kind of thing. So this thing could easily feed on itself. Not a prediction, just letting you know that how important this level is on Apple. And you can see that, let's just look at the weekly chart. I think I have it here. We haven't even retraced 38% off of the COVID move, and a lot of other stocks like Amazon and all that stuff, they're already at 61.8. And not to throw out the absurd, But if everything's going back to the pre-COVID high, that's all the way back here at $80. I know it seems absurd now, but you lose the 40-week moving average, you lose 145, you come back to do a 38%, and it just kind of rolls downhill. All I'm saying is, well, let's look at these other charts. Save that for a minute. Tesla, we had the levels identified. We came down here to 860, where we had prior support. I think that's your pivot today. When we go to the daily chart, we talked about how important this 200-day was, and now we got the big lift off the Fed. We ran right smack dab into the 20 and 50-day EMAs and this downtrend line, and got rejected there hard. Now we're back below the 200 EMA. I would be pivoting off of that level, and you can be long above and short below. But momentum, bearish regime. Momentum, or RSI, bearish regime, favors more downside. And you can see that we recently had a tag here of 825. That would be my first target on the downside, coming back to revalidate this prior low. And remember, we're well off the February and March lows that are right here at 700 and let's just call it 775. We're well off that, so well within the realm of possibility that if everything's going to their February lows, and in most cases getting ready to break those lows, I don't see why Tesla would be any different. Microsoft, 4.3%. This is the daily chart. You see the gap here that is yet to fill. You see the March and February lows right here at 270. My base case is that gap fills and we at least come down to those levels for a touch. Let's talk about the 60-minute chart, which, if you've been working it, should have been a gravy train for you, to be honest. We've been flagging this 291 level as a continued place of failure. Fail, 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 fail. Can't remember if we got this one, but I know we got this one. That was money. The other day was money, and yesterday was money. Shorting Microsoft 291. You keep doing what's working as long as it's working, and Microsoft shorting 291 has worked for a long time. And I mean, if you got a crayon, make that be a giant, thick, black line on your chart, because until Microsoft can prove it can get over 291 and hold it, it's not going anywhere. So that has become a massive line of resistance for Microsoft. You can see here the invisible hand, whatever it is holding this thing up. I would have thought this would have filled here, or even yesterday here, but I'm still holding out hope that this goes ahead and fills this gap down to 270. I want to take a quick look at the weekly. All things considered, holding up pretty well, but still in a downtrend. PPO has broken negative. RSI has been negative in all of 22. So indicators are favoring lower. We are 38% retracement is down at 263. I've just got penciled in 260 as a target on Microsoft, and really it's only $10, $10-12 lower than where it is now. But then things start falling away a lot quicker below that. Amazon, when you see a bullish setup that fails, double bottom, bullish divergence, fail, right? That's what happens in bear markets. Bullish setups fail, just like bearish setups fail in a bull market. When you see bullish divergences that don't play out, that's an indication of bear market action. So got rejected here, broke the prior low at 2,400 and down 7% for a mega cap name. Let's look at the daily. Bracket trade worked like a champ. Now we've broken the low, coming down here, 23.28, big, bad, nasty bar. But here's the real story. Look at this thing, let go. We talked about this $600 wide trading range. Once you broke that, your target is $600 lower. 600 from 2,900 is 2,300. So there is your measured move target achieved. Now, there's really not much here. You can see that, this was a fast move up, and we just spent about a month in this area. You break 2,300, I would say coming back towards the pre-COVID levels down at 2,000. So there, that number comes back in again, and you can see there's a little gap yet to fill. Google weekly, 38% retrace. You can see that this 2,200 is a big level because there was a pretty fast move coming out of COVID, and there are very distinct spots on the chart where you've got the volume over price bars, and they tend to align really, really well with the Fibonacci retracements. So on a break of 2,200, I would say coming down to 2,000 really quickly, and then below that, 1,800. So you've got multiple $200 increments, and then look again at the pre-COVID high down at 1,500. That would be your complete round trip. We can look at the daily real quick, and then the 60-minute chart. Nice downtrend line here, broke back below after the fake breakout on the Fed. You've got a level here at 2,300 that I would be keying off of on the downside. And here's a 60-minute chart. You've got a nice ledge right here, back at the original bracket, if you take note of that. Right here, right at 23.20, right in that range. So back at the midpoint of this trading range and back to the original bracket. You break below, I think you're going to come down to 22.50 pretty quickly. Netflix, back at the lows, 187.50. That would be a good place to mark an alarm. You get a break below that, I'd have to assume there would be more sellers. Here it is on the daily chart. Really not all that helpful. But here we are on the monthly chart. Totally broken chart. We are in a massive void in the chart. No volume over price support at all. We are already past, well past the COVID. COVID was right in here. That's where it took off. So we've already blown past that. And just from a technical standpoint, we've already talked about this, so it won't be a surprise to longtime listeners. 125, and just coming back to the long-term uptrend on Netflix brings you in at 65. I think that is the level where people say, yeah, it's TV, just like CBS used to be TV back in the day. You got subscribers, you got ads, you got, a monthly fee, whatever, but it's not any kind of big, revolutionary type business. It's TV, and that's going to have a multiple, and maybe that multiple is, half or a third of what it is now. So who knows? But just technically, if this thing can't get back above 250, then 125 comes next. Semiconductors had all the levels perfect. We said it needed to break out above this prior trading range, gapped lower. We've been focusing in on 240 the whole time. When it lost 240, that was your short. And once you re-enter a trading range from above after having left it, your target is the bottom of the range back here at 233. I think that's your pivot today. You break below that, you're going to come back down to 228. I want to show you the daily chart. Here we are here, back below the midpoint of a well-defined downtrend channel. I've got a really important level right here at 223, and that comes off the weekly chart on a big ledge right here. You drop below 223 on the SMH weekly, not going to be anybody home, I don't think. And I think you'd be coming down here to 205 on the 50% fib retracement, and possibly even 180 at the 618. And look at how far away the pre-COVID high was, down at 150. And if you'll recall, we had some real wars around 150 on the way up. So, I remember those locations. And then once it broke out, it was gone. So that 223 is going to be a massive level. And given, today is Friday, weekly charts, all that matters is the Friday weekly close. So you get a close down at, 222, 220, that will give you a sell signal on the weekly for these lower levels. So really important day as far as the weekly charts go. I know we're running long, but I want to go through this. ARC F, back touch, fail, going lower. There was a big buyer of, let me get this right, June 3rd, 20 and a half puts. They bought 15,000 of them. I'm in that trade. Not even hardly up at all. So I think you can still get that if you want that. June 3rd, 20 and a half puts in ARCF. I think it's going lower. Genomics, same thing. Back touch of resistance. I'm not in this one, but I think it's going lower. ARC K, this is the weekly. Let's look at the daily. Same type action. This was really painful. I was short. I had to cover on this back test move, not knowing, where it was going. and then it reversed again. So I'm back short in ARK, off 9% yesterday. And then ARK W, same kind of price action. I'm back short ARK W as well. And I mean, I think there's a real good chance that these ARK funds get zeroed out. A lot of these companies, if this rate hiking cycle funding issue persists for any amount of time, they don't make money. I think it's going to be hard for them to raise money. And, you know, all the people that are in the ARK funds are just going to be tired of their money being incinerated. And when those redemptions come, I think they're going to be fast and furious. It's nothing against Kathy. It's just the holdings that they have. Just, I mean, you know, is Peloton, you know, a $17 company, or is it a $5 company? I don't know. But a lot of these companies I don't think are going to ever make money, ever. So, and ever is the time frame that they're going to need to survive. That's my point. So, not a prediction, just wondering out loud, are these guys going to make it? And then here's the FDN Internet First Trust Internet Index, FDN, already back to the pre-COVID high and threatening to break down, and you know, maybe headed to COVID lows. Who knows? Let's wrap it up there. Long video. Hope you got something out of it. If you're new to the channel, you should know by now whether you're interested in the content or not. I place a lot of emphasis on technicals to give you the important levels that you can alarm and then make money on that day. So really important day today, or yeah, today. See how this week closes, and hope you have a good day of trading. Hit that subscribe button and the alarm bell. Jump over in the show notes. Find the link to the blog site where you can drop in your email address and get all my content morning, noon, or night, and certainly over this weekend. This has been Chris Buss with Traders Profit Compass. Talk to you next time.